And so what this is showing is essentially, while history doesn't always repeat, it often rhymes, and we can see that this current cycle is mirroring similar to price action to the couple other cycles that are shown here, color coded on the charts.
What I would say is this: if they're right, that you can demonstrate that the spot market has similar efficacy to the futures market, it would be hard to resist approving a Bitcoin ETF.
What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Bitcoin still going sideways at the start of this week. I can sense everybody getting very, very impatient out there. Well, as we know, when we get this volume dropping off, we get this boring sideways motion, you know something big is about to happen. So we are going to talk about the TA. I'll put that at the end of the video today. But what I do want to speak about in the short term is the fact that we actually have more evidence now of increased U.S. trading as well as institutions. Now, clearly, there's been a lot of excitement about the ETF. Now, I do have a bit of caution in regards to the ETF, but honestly, there is more positives than there are negatives. One thing that we have to pay attention to is the fact that we are seeing liquidity drying up. I put that out on my YouTube short. If you guys are following me with my YouTube short videos that I put out, explaining that we've been on a steady decline in Bitcoin being released liquidity, right? Pretty much since the third halving for Bitcoin. So this is all going to play in to creating basically that perfect storm for crypto. And you know what else? Something that not a lot of people are paying attention to? China factory deflation. I know that sounds absolutely crazy out of left field, but could that actually be the perfect concoction for an insane Bitcoin pump? Well, we're going to talk about all that today. And of course, the fact that, previous SEC chair, Clayton came out, and as you can see, he does have some opinions about the ETF as well. So, like I said, guys, take it with a grain of salt. There is a little bit of caution, but more positivity, I would say. So again, TA, at the end of the video, make sure you get subscribed, though, because we are going to have a lot of things to be going over as this unfolds. So as I've been talking about, yes, we have seen crazy shark and whale accumulation, 71,000 Bitcoin in just the past 3 weeks. And we've seen a lot of them leaving the exchanges, drying up, creating this liquidity crisis, right? So obviously this ETF comes out, spot ETF, it's gonna, obviously there's a demand for the physical Bitcoin, and now the liquidity's drying up. Can you see how this could actually turn out pretty good for Bitcoin? For example, Standard Chartered, right? They were looking at about a $50,000 Bitcoin, price. Now they bumped it up to 100. And again, they came and said, you know what? I think we have to add an extra 20% to the upside. This was the analyst Jeff Kendrick. So now these guys are looking at a $120,000 Bitcoin target by 2025. I personally think that will be a easily attainable target. But how funny is it that now that BlackRock, who controls everything, they're getting their hands in the pie, right? All of a sudden, you're not seeing any more of this Bitcoin mining FUD. In fact, everything you need to know about Bitcoin and the environment, right? This just comes out from Forbes, and it's all about how all these miners, are going green and everything's really great. Biden administration dropping the proposed 30% tax on Bitcoin mining. Coinbase shares up 50% since the SEC lawsuit. What's going on, my friends? Obviously, somebody knows something, and I think BlackRock is pretty convinced that they are going to get this ETF approved, even if it has to get kicked down the road a little bit longer, right? So again, going to talk about what Clayton was discussing over on Squawk Box. Basically, he was talking about how the landscape of cryptocurrency has changed over time, and his opinion on potentially how soon, when, and why the ETF could be approved.
If you watch with interest as blue chip firms have decided that they want to get involved with Bitcoin or crypto?
Well, give me a minute. It's a fascinating etymology. Let's go back to like 2015, 16. This is an offshore retail, nothing close to what I would say the core of our financial markets. At that time, if you look at trading of Bitcoin, the emergence of Bitcoin, it looked like stocks, but it was nothing like it. Now we've seen a development all the way to the point where companies whose reputation in the market matters are saying, you know what, we think that trading, we think that the custody, we think that those protections around this market are sufficient that we're willing to put our name on it and offer that product. That's actually an incredible development, not one that I expected. I was very skeptical of trading in the Bitcoin market when I was SEC chair. I thought, there were studies that 90% of it was wash trading, ripe for manipulation and the like, large people dumping. The fact that we have these institutions that know markets better than anybody and are saying, we're going to put our reputation behind it, I find that pretty remarkable.
Can they say no to a spot ETF? For how much longer?
Well, it goes to that issue. I think that when the SEC approved the futures-based ETF, they said, let's look at the futures market. We see the surveillance. We see the protections in that market for the end investor that are sufficient. We don't see them in the spot market, so we're going to make that distinction. I think what the institutions are arguing is that those distinctions have gone away, and now the spot product is actually less drag, more efficient for the investor. So if there's not that delta in regulation, not that delta in what I could say efficacy, the spot should be approved. That's the argument that's going on right now. Look, the regulatory process, whether it doesn't matter.
It's been a while already.
It's been a while already. What I would say is this: if they're right, that you can demonstrate that the spot market has similar efficacy to the futures market, it would be hard to resist approving a Bitcoin ETF.
Now, while we are taking some steps in the right direction, you have to admit the US has been dragging their feet. Mike Novogratz of Galaxy Digital said that he's actually considering relocating his business away from the US right now. Now, he still is very confident in the US eventually getting their you-know-what together, but in the short term, it's just not really friendly for these companies. But, just because, it tends to be this echo bubble in the US, right? You live in the US, you kind of only really look at US news. You don't really look at what's happening globally. But if you look worldwide right now, crypto is actually booming, and it is being embraced or at least accepted and regulated by so many other people. You have the European Union recently passed the Markets in Crypto Assets regulation, right? You have the UK developing blockchain-based solutions. Hong Kong, which is crazy, Hong Kong, the financial sort of hub for China, aims to position itself as a leader. They're even inviting large US-based companies to move to their jurisdiction. They're like, US is a little tough. Come on, guys. Come on over to Hong Kong, right? Singapore, they've taken a proactive approach by licensing and regulating exchanges. And of course, everybody knows Dubai, which is like the crypto center of the world where all the influencers go live. So many people ask me, why have you not moved to Dubai yet? I'm like, because I don't really love 120-degree weather. I've been there. It's nice. It's fun. There's lots of things to do. But, it's a little overwhelming for me. But, hey, we all got our own personal reasons, right? But I do have, I will be in Dubai. I'll be there twice this year. I usually visit a few times. So if any of you are in Dubai, I do visit Dubai. I just don't really want to live in Dubai. No offense to Dubai. I mean, it's a great place. I just, I like where I'm at. So anyway, I digress. Talking about this China's PPI, right? So we know that this is a measure of factory gate prices. It fell 5.4% year on year. So this is the 9th consecutive month. What does this have anything to do with crypto? Well, David Brickell, who's director of institutional sales at crypto liquidity network Paradigm, he says China is exporting disinflation across the Western world. We're seeing it reflected in producer price inputs, but not yet fully feeding into our customers' prices. According to Brickell, Bitcoin will probably begin the next leg higher once bond yields peak. The knee-jerk reaction is to focus on the negative implications of a Chinese growth slowdown. Risk assets are also adjusting to last week's vicious bond sell-off as yields top out. He says, I suspect stocks will stabilize. I expect a reversal in yields to trigger the next leg higher for Bitcoin, especially given the underlying weakness in the dollar. And I can't stress enough that the dollar has been month over month basically just falling after it had this massive uptick from June of 2021. And I said, if we fall below this 100, we could potentially see a really large rally in these risk assets, right? So coming over here, it's not all doom and gloom, right? We do have major Wall Street players changing their minds, right? It's not just Larry Fink from BlackRock. We also have Ken Griffin. He's another billionaire financier who called the crypto sector a jihadist call against the USD as recently as 2 years ago. Fast forward to today, Citadel Securities, which is Ken Griffin's electronic trading company, started backing a platform that allows institutional investors to trade digital currencies. So just like BlackRock CEO Larry Fink was saying, oh, it's just a money laundering tool and absolutely nobody is demanding it. Well, fast forward to today, and even Fidelity, which is the largest 401k administrator in the US, they're trying to get in crypto in several different ways. And even just talking about Web3, you have companies like Sega, very popular company, saying that they're going to bring one of their biggest franchises to blockchain platform Game Dosi. What do you think one of their biggest franchises is? A lot of people are thinking maybe it's Sonic, something like that. So very interesting. So they'll have NFTs and things of that nature. But getting off of just everything going on right now, I do want to get back to Bitcoin. So Will Clemente, who does a lot of on-chain analysis, was over on Anthony Pompliano's channel. I'm actually going to give this video a like if you haven't checked it out. And, basically he was talking about what we're seeing right now in the space. And he had a lot to say. There's three main topics I wanted to discuss. The first thing that he goes into is essentially, is the US actually seeing interest? Are the institutions actually coming into crypto, or is it just retail driven and it's just a bunch of sort of, fluff and excitement and moonboy talk?
The ETF trade has been kind of in full effect across several different things, but who's been primarily putting that trade on? It appears that it is US-based entities that you just alluded to. There's two things that I kind of look at as evidence of that. The first is what's called the cumulative return by session that we can look at from Velo data here on the screen. We have it broken down into the EU, APAC, and then US trading sessions. And so what we can see is that, especially again since the BlackRock filing, but even slightly beforehand, we could see that the US has been more actively bidding BTC relative to those other trading sessions. And then as another piece of evidence that we can look at to see that there's kind of US-based firms getting involved in BTC recently, we can look at the Coinbase exchange trading volume, the Coinbase price premium relative to the other exchanges. This means that Bitcoin has been trading marginally higher on Coinbase relative to the other crypto venues. And then the last piece of evidence as well is looking at CME futures open interest. So this just looks at the total number of futures contracts outstanding on the CME. Who usually trades on the CME? It's not kind of crypto degenerates that are looking to punt on leverage. It's kind of US-based traditional type firms. And we can see a clear jump in CME futures open interest following the BlackRock ETF. About $1 billion of open interest was added in that time period.
So this brings us to, if we do have this ETF approval, just hypothetically, let's say we do, and there becomes that demand for the spot Bitcoin, but yet as I showed you guys in yesterday's video and in my YouTube short yesterday, that we are seeing decline in the amount of liquid supply available. So could this actually be good for the price by creating that liquidity sort of drying up, that liquidity shock, supply shock?
Yeah, so essentially what we're looking at here is Bitcoin's long-term holder supply, or the amount of supply held by long-term holders. The way we're defining that is by looking at on-chain entities that have held their coins for at least 155 days. If you divide that by 30, you get about 5 months. And so the reason why this kind of threshold was chosen is not just some arbitrary number. Glassnode basically ran some statistical studies and found that past that 5-month threshold, the likelihood of coins being spent back out of wallets drops off dramatically. And so when we look at the percentage of long-term holders supply that makes up of market of the overall circulating supply, we can look at the inverse of that. So the amount of supply that isn't held by long-term holders, and we have what's here on the screen. And so in purple, it's showing you the amount of supply that's not held by long-term holders. And so therefore, we can see that that's nearing all-time lows, as the inverse of that, which is the amount of supply held by long-term holders, is nearing all-time highs. And so what does this mean? It means that the amount of Bitcoin that are for sale right now is near an all-time low. And so of course that will change as we get higher prices. Higher prices incentivize new sellers into the market. But I think it's pretty safe to say that the amount of supply that's been held over the last 2 years, throughout all the kind of craziness in the crypto space, it doesn't appear that these entities that are holding these coins are going to be selling anytime soon without significantly higher prices.
Probably the biggest question that everybody's interested in as well is the bottom in?
So if Bitcoin is leaving that area of kind of deep value, if you will, does that mean that we now are officially bottomed? We're in a bull market and like kind of kicking off that whole process again?
Sure. I mean, it's always tricky, like calling bottoms for sure. I kind of lean on a realm of probabilities. I would say yes, with the caveat that, like, of course, we could retest the lows. Something takes place like March of 2020. But I think at this point we've kind of moved out of that area of deep value and accumulation. And I think just the sheer amount of forced selling that took place at the end of 22, I think would be pretty difficult to replicate.
So again, not really too much to go over when it comes to the TA. That's why I wanted to do a little on-chain data analysis with Will Clemente, because I've been showing you guys the same charts over and over, because if Bitcoin doesn't move, then I don't really have a difference of opinion of what to expect, really. In fact, the fact that Bitcoin is kind of building out this sideways structure, you could have that fake out to the downside, but to me, it shows more strength until we start losing some of these trends. And again, very, very similar structure. Zooming in here, we are in fact in the blue zone. Like I said, too much demand at around 20,000. We have the MACD on the weekly flipping again. We're staying above the EMA, very nice. Same thing over here. Still kind of just looking on that money flow. This is the daily, actually. Let me go to the weekly. So yeah, the weekly is looking very, very much again, like, if you just look at what happened right here and you look at what's happening right here, you can't deny that it's basically the same exact thing. Look at what was even going on down here in Market Cipher, and look at what's going on right now. I mean, very, very similar, very, very similar. So yeah, I mean, I do believe that we are setting up. I've been saying on the channel that I think the bottom is in. Could I be wrong? Sure. I mean, I'm not Nostradamus, but I am very close to being 100% certain that the bottom is in. And I remember when we came down to those levels, we called it because we knew that, once we got below this key area and we came down here, we said, look, this is the golden buy opportunity, right? So if we do come down, we might have a retest at around maybe 28,300. But yeah, the next target is basically 35,300. And as you can see, we had a little bit of a fake out right here, but it wasn't really a fake out because we were expecting a retest of this $25,300 area. So even though we did fall out of the pattern, right, the fact that we're still back in the upward sloping trend, all it really did was just confirm that level. So for me, that's extremely bullish as well. If you guys do want to trade, you guys know there's tons of bonuses below. In fact, I've been looking into some other exchanges as well, because KYC, it sucks. A lot of people don't really want to do it, especially if you're US. So there are some other options, which I will let you guys know about. There's an exchange I'm looking at right now. Obviously, I want to make sure that these things are credible before I just talk about them on my channel, which is why I haven't talked about it yet. Of course, we got lucky. We didn't talk about FTX. Really none of the things that collapsed we talked about, which we got very lucky, but you never know. Still got to do your due diligence. And again, just because I talk about something doesn't mean you should just go do it. I'm just a guy on the internet. You know that, right? But of course, we do have also, don't forget, the CME futures gap up here at around 35. So, when you go back and you have a look at some of these, as I've said, we've had this falling wedge pattern, and I've had this target on this breakout here for quite some time. This puts us upwards of around 57,000 ultimately. And I will also just point out that there is this area of interest right here, which is around 47. So again, I still have a target literally possibly by the end of this year. As soon as we get this breakout and the retest, if Bitcoin comes back down to around that 28.5 whatever area, I would put in a long, and I would say that not financial advice, of course, but you could probably ride that thing straight up to between 47, 57,000, something like that. So again, that's still just my opinion, guys. That's where I'm at. Still, trend is your friend. Trend is going upwards. And, again, we also have this beautiful cup and handle looking like it's going to break out. This cup and handle breakout should at least be the same height as, the cup itself, which again, I believe is going to bring us right around that $47,000 area that we've been talking about for literally months on the channel. So that's it for me today, guys. Thank you so much for coming back to the channel. Hope you're having a wonderful start to your week. My name is K-Dub. This is Crypto Zombie. I know you might be chilling. I know you might be getting bored, but I'm telling you, things are going to get exciting, and I think we're going to have a really good end to this year. Now, of course, we're going to have pullbacks here or there, right? 30%. It happens. But I think the long-term trajectory is to the upside. So if you guys do want to learn how to take advantage of that, you can watch the tutorials popping up right now. Check out the links below. And like I said, I'm going to be looking into this other exchange, bringing that to you guys as well. So that's it for me. Until next time, stay crypto. And of course, peace out.